Good morning, all. This is Trader72 back in play this week. It's a Monday in London. It's not bad weather, looking pretty good. And after a festive weekend, I hope you all had a good weekend. Welcome back to my YouTube channel, first and foremost. Please like and subscribe, or subscribe and like. Oh, I got it the wrong way around there. Still getting used to this whole YouTube setup. But yes, back in play today for another week of trading. Let's hope it's a good one. It's been turbulent for the past few weeks. But before we get to all this, lightening up a little bit. I hope. I don't know, how was your weekend? Please make some comments below. I'm always happy to hear back from people who what they've been up to. As for me, just did a workout. Actually, I do my homework. I've got my weight here in my little room, which gives me a little bit of a good start to the week. Did a little bit of shoulders and a bit of stomach, a little bit of biceps. And it was well needed, especially after this weekend's festivities, where we had obviously Mother's Day yesterday. We went to my girlfriend's family and we ate well. A fantastic bit of food, and ate well pretty much on Saturday night as well, actually, funny enough. So we've had a bit of a feast over the weekend, and then I had a wonderful game of golf, which I'm sure some of you might not care at all. And some of you who like golf, well, I did have a good round with my brand new clubs, and we played Scramble with my girlfriend, so we played on the same team, picking up each other's shots, and we had a good round. It was a very hilly course. It was very muddy, and obviously from the storms from a few days before that, we had an very slippery, muddy ground, especially the fairways. So it was hard work, and I must admit we both felt like we could not walk the next day. So I'm still feeling the effects of that. Even during my workout, I felt the effect of it. But shake it all off. This is why it works these days when you're coming to my age. Things do not recoup as fast as they should have done in the past. That is age, unfortunately. Some of you may not even know about it, might think you can bounce back. You are young forever. Well, it's in the mindset, but the body tells you it's slightly otherwise. It does take me a lot longer to recoup now, especially after a golf day like this. But it was fun. Listen, we had a great time, and we certainly had a good round, and the season is upon us again to go out there. It's for me, it's cathartic. It just helps me to clear my mind, just go for 4 hours out in good walk, fresh air, a good game. I do love a walk, but I find walk can be quite boring, so that kind of combines the two well. So yeah, very good all together. Really good weekend, family gathering. Football, however, wasn't that great. For some of you who may not know, I am a Chelsea fan for the last 32 years, so I've just supported Chelsea since the mid-80s. Yes, some of you may think mid-80s is a long time ago. It is now 40 years to the day when I start supporting Chelsea. Can't believe how time flies. Please do enjoy, because it flies away quick. But again, another dreadful result with Chelsea. I have no idea what's going on. It was the worst performance I have seen of Chelsea, probably, and I've seen quite a few bad ones recently, but I'm not convinced about Leroy Rossini and his tactics. I just feel like we were passing backwards and forwards, no intensity. The goalkeeper again, this sweeper system. I did ask about what you guys thought about this sweeper goalkeeper system, but we didn't even muster a shot on goal. They were so direct, Newcastle, and so much better than we were. And with the amount of money we spent, really, you've got to wonder what the owners are doing for Chelsea. These Americans, and I'm not the one to have a go at anybody, particularly trying to be as neutral as I can, but these guys, this transfer policy of younger players with no experience in that team is started to really take its toll on us, I think, as a team, and I can see troubles ahead with Chelsea fans, I think, in the long term. But here, anyway, I am waffling on about Chelsea. I just thought it's always good to kind of lightening up the start to the week. But without further ado, and please do make some comments if you have any comments about Chelsea or anything I've said so far in terms of the weekend. Always good, like I said, to see what's on the other side of just being a trader on YouTube. So without further ado, as I said, let's go to the news of the week. We are starting the week. Now, I've had, obviously, as some of you may know, a position on oil short at $92 a barrel. It unfortunately went for me a little bit further up to almost 106 this morning when I woke up. Well, I did check in the middle of the night. Sometimes you can get slightly sleepless nights when you've got especially commodity positions. But yes, it was a bit of a shock this morning. 106. I've got to be honest. Lots of people I spoke to online from a different platform were all expecting oil to pop by 120, 130. But these people forget that it is all driven by news, clicking, and it can be quite dramatic. And I felt that when you actually read the news from a good outlet, a good bit of news, a news that tells you the basics, that it felt to me as if nothing really did happen over the weekend, apart from it did happen, but obviously the war is ongoing. But it didn't feel, I think feels like they're steadying up a little bit in terms of the Strait of Hormuz as well, which is the main issue for why crude oil is up. So that's my opinion at the moment. I can give you a further opinion if you guys want me to, but I think I felt that the news was not as traumatic as it was possibly last weekend. So I felt fairly quietly confident that the crude oil would not pop on the opening late last night, because obviously it opens at 11 o'clock at night, London time. So I felt relieved a little bit, because I did think it might. I did put an alarm at 110, 112, 115, so forth, just to give me an idea of where the price is at. I was going to add to the position, because I think sometimes oil, obviously being commodity, goes up and up and up, but I think it has to come back to some kind of level. So again, maybe a chat for another YouTube video when I actually mention about this adding to the position, but that is something I'm definitely looking at. If it was to go anywhere north of 110, really, I don't think there's any point in me adding a position now at 104. I think it's 103 currently. So let's have a quick look at the current latest news, and I'm going to whittle through, because I think most of you will obviously know a little bit about it already. US stocks future rise. Trump calls for a reopening of the key shipping link. I mean, obviously, he's realized that is now starting to get costly in terms of worldwide, in terms of the actual oil transportation. It is one of the biggest issues we have at the moment, and in the history of oil, apparently it's been one of the most biggest disruption we have had in the history of crude oil. The recent points is the Dow Jones is up. Actually, funny enough, this morning, because of this Trump headline, it has helped to slightly stabilize the situation. Donald Trump has called for several. I'm just going to highlight there what is the bits of this article here. Has called on several countries to help Washington reopen the Strait of Hormuz. However, in comments report on the Air Force on Sunday, Trump did not say if any agreed to his request. Now, it has been a bit eerie and a bit quiet, but again, I'm not going to get involved in the politics of who's who and what's what and who doesn't want to do it. That is the way it is. He's also asked NATO, which is the North Atlantic Treaty Organization, to assist in the opening of the strait, adding it would be very bad for the future of NATO should these questions either not respond or refuse to aid Washington, that's what it's there for. Stuff about China, which we won't go into too much at the moment. So the Wall Street, citing the European United top diplomats, said the bloc is mulling over the option of mulling, even, can I speak this morning, of the reshipping of the shipping and helping out, buttering off most of the tankers traffic through the geography. So it's all being kind of locked off at the moment, and that's why the Brent is going up by the minute. Now, beyond that, there's other news that we can go beyond in terms of NVIDIA is having their daily or their yearly contract conference. We'll step back to the spotlight, the artificial intelligence semiconductor giant annual developer conference beginning on Monday, with investors keen to see what new offering the company might be planned. So that will be probably center stage in terms of AI and the latest AI cards. One other bit of news which has popped up is Meta is considering, and this is allegedly considering, a layoff of its a fifth of its workforce. Now, obviously, it's always sad to hear people losing their jobs. I am myself in the film industry where, half my business has disappeared in the last few years. Things are changing for the worse for people that are working people, for sure, and it's never nice to hear this. But obviously, with infrastructure and the artificial intelligence infrastructure, they're going forward and spending at the moment. They are clearly trying to balance the books, which is amazing to think that Meta has to balance the books. Now, I don't know whether or not they're balancing the books or they're just spending more money in certain areas. But anyway, it looks like in pre-trading, obviously, that kind of news, the market always seems to react well. And unfortunately, the less people you pay, the more obviously the bottom line goes up. Especially with the current spending in AI, at the moment, capex. So it looks like the actual stock is up 3%. It was actually down on Friday due to these issues they've had with AI launches. Avocado, what a name! I'm not quite sure where they found that name there, but each their own, as they say. So that was delayed, so that was down, but it seems to be going back up. So that's the kind of overall news this morning on the Monday morning. Oil supply, we've already gone through that. Just in terms of back to the news, just to backtrack slightly on the weekend news, Iran obviously hit Karg, I hope I'm saying that the correct way, Karg Island, which handles 90% of Iran's oil. I don't think, and this is what the rumors that they hit all the oil tank, the oil infrastructure there, they did not hit that from what I can gather. They pretty much hit strategic military bases so far. I mean, he may well go back in and start targeting oil, but obviously that would also not help the price of crude or WTI. So, I think that kind of popped the opening, possibly one of the main reason why the crude oil went from 104 on the late start, from the close on Friday to the opening on last night, or the opening this morning for some of you. So obviously that's had an effect, and we all know why. Just to kind of recap, 20% of global supply passes through the Strait of Hormuz. So that's kind of where it's at the moment. And that's obviously, obviously the more expensive, more disruption there is to deliveries of the crude oil, the more expensive it gets, the more the inflation goes up, obviously. And we've already got a sticky inflation as it is. So this will compound to it. So I think this is the worry, just to recap the bigger story here of this situation with crude. Okay, so I think moving forward, I think market takeaway, bullish pressure on oil, inflation risk rising. I've just recapped on that already. Potential volatility for equities, energy stocks likely supported. So energy doing quite well at the moment in terms of that sector. I think the rest of the sector is not doing as well, obviously. Major key events this week. Now, obviously, this is a brand new week. We are starting afresh. So we got the main takeaway of this week will be the Federal Reserve decision, which is the main event, as it says there. It's the FOMC meeting, which tends to dictate what they think, what they're going to do going forward in terms of inflation. I think we're kind of already pretty much aware of what they're going to be doing. I don't think they're going to be doing a interest rate cut for this month, next month, and I think we're probably looking now at probably 2 cuts, one starting in September. But again, we might get a little snippet of news from the Feds in terms of going forward, which can move the market, especially S&P 500, Nasdaq, and the bonds market. So that will be the key, I think, major news bar the Middle East conflict, and obviously economic news to put in your diaries if you're really that interested. I mean, it does move the market a tad here and there. I'm not convinced it always does, especially if you're a long-term investor or medium-term investor. I don't think that does, but it does do in terms of spending, I suppose, for if you hold someone like Visa, which I do. Consumer spending is obviously quite key there. So at the moment, we're looking at US retail sales on Monday, Wednesday, the PPI news, and I can go back through these numbers as we go towards those days. Jobless claims, and I think the end also of the earnings season for companies is this week. I think Lululemon this week is the last of the big ones I'm interested in terms of looking where that might go. FedEx obviously is always a big one. Global shipping demand, that's always interesting to see where the world's going in terms of shipments. That should be interesting with the conflict at the moment. I'm not sure if that will affect it. That pretty much. Now, in terms of my portfolio, we can go through that in a minute. In terms of Adobe, Visa, obviously S&P Global, the 3 major stocks I own, bar obviously plus on top of that my oil position, which, to be fair, when I did this YouTube video wasn't really in the plan, because obviously I like to stick to stocks. But I saw an opportunity there, so I kind of moved in, as well documented from previous videos. So market outlook for the week. I think we're going to be looking at, again, a volatile market. Spikes probably around. I'm not sure where the VIX is at the moment. Something to check. I mentioned about the VIX last week, which gives you an all-around idea of volatility of the market, whether it will spike up and down. The higher, obviously above 15, the higher above 20, the more the markets will be very choppy, which gives you an idea at least of if you buy into a stock that you are going to go ups and down with it, whatever happens, and specifically in specific sectors. So yeah, volatility, spikes possible, stocks choppy until Fed decision as well. On top of that, they will compound. So again, I think a volatile situation there. Unless, of course, they resolve the situation in the Middle East quickly. So far, just to give you I'm on it today. We are going for the full whack. Report on so far on S&P and Nasdaq so far this month. It is down between 2.1 and 2.4, and the Nasdaq only 1.5 to 2.0. I think before we think that it is a proper retreat, a proper fallback, we're probably looking at really over 5% before we start thinking there's a proper track back. I can't remember the word they use, but it's obviously where the market will fall below 5-10%. And at the moment, it's still holding, at 2.1, 2.4, and very much the Nasdaq has been performing fairly well, considering there's obviously all these conflicts going around and inflation is sticky. So there's lots of things going on. So quick look for you guys at the US 30, which is the main index for me. US 30 is equivalent to the S&P 500 on my platform. And as you can see there on the weekly chart, it has taken a turn down from February 7th, obviously. For various different reasons. Obviously, the software AI sell-off, then the Middle East conflict, and then the issues with credit rating, credit companies as well at the moment in terms of loans, corporate loans. And now, obviously, inflation being sticky, as I said. So you're looking at there, if we're looking at the fallout, the 2% fallout, this is where we're looking at the moment. Now, still above the 50-day average. And obviously, the big marker here is the 200 moving average. And you see from, obviously, the April and the obviously, fallout from Trump's tariffs about a year ago, which is already nearly a year ago. Can you believe it? It's time flies, doesn't it? As I said in the early video, at the start of this video. So it touched briefly at 200 moving average and then bounced at 36,371, and it quickly rebounded back. Now, whether we're nowhere near that yet on the one-day chart, although on the one-day chart, we are below the 200 moving average. So if that doesn't bounce, we could be seeing, I think, 5 to 10% fallback on the indexes, which would hurt a lot of stocks, including mine. So I'm a little bit on edge in terms of that, but that is the way the market goes at the moment. So that's something for you guys to look out for, because the S&P 500 is nevertheless, or the Nasdaq is nevertheless the two main indexes of mid and big caps in the US. So looking at the Stoich there, which is the momentum, it is in oversold now officially, and it is in heavy selling on the MACD. So definitely a pullback at the moment, although it is up today nearly 1%. Thank God. Nice to see a bit of green, but something to look out for, I think, going forward this week or into the next few weeks. So that's the S&P 500. Nasdaq is probably fairly similar, although maybe performing slightly better. Quick look at my portfolio this morning. Nothing major changes really. S&P Global has popped back up to 426. It was struggling on Thursday, Friday due to different circumstances. We all know about as I said, the credit crunch there with corporate companies lending money, a few people having to do redemptions, and obviously write-downs on loans. So that's something to look out for in the background, I think. And it does affect S&P Global because obviously it's credit ratings and obviously also affected by the S&P 500. But at the moment, as it stands, I'm only £100 down. I bought obviously a second tranche last week, which is well documented, up slightly in the green at the moment, and down on 119 on my second tranche. It is officially my biggest holdings at the moment, with 8,500 shares in S&P lent, obviously, because it's obviously spread betting this. So £1,700 deposit from me. So officially my biggest holding. Adobe, struggling really, but as we would understand after last week's performance in terms of trading update, which was good, but the CEO leaving. Little bit concerned, maybe perhaps that they haven't come up with a replacement for the CEO, which has been there for 18 years. It is a bit odd. I don't really know why they haven't at least have some candidates or some potentials there, people lined up, because it will make people nervous. So it does concern me. It's at 250 at the moment, back to where it was pre trading update last week. Something to look out for. I've got still the feeling that it may fall back a little bit further. I think it will also depend on the AI SaaS software, whether or not that we're out of the wood on that at the moment. That's, I don't know, very unlikely still. I think there will be a further pullback. I think people are not convinced that these software companies will survive this new AI revolution. Like I said, we all know what my thoughts are on that one. Can go into another video at some stage about that. Anyway, so holding on, the crude oil is coming back down, thankfully. It was at 106 this morning, so nearly £300 in the red, now back up to 217. Again, this is me giving you a complete transparency of one of my accounts. I have got another account, to be honest, but this is the account I chose to put money in to do this channel. £5,000 to £10,000 account, and it's well, actually at the moment between 5 and 7, actually, to be exactly precise. So yeah, interesting how that is going to play out. But again, as I said, no BS. This whole channel is all about the ups and downs of being a small retail investor with a small amount of money, not making millions. I'll be happy to make £500 profit here and there, maybe even £250 profit. I did collect quite a bit last year on UNH, which was a good amount of money. I can go up to 2-3 grand profit. So it really depends. But at the moment, small victories. Since I've started this YouTube channel, everything's been in the red. So that gives you kind of an idea what it's like. But it is about patience. So I'm not in it to just come in and out within 24 hours. This is possibly 2 to 3 months, 6 months, depending. My account value is small at the moment, so I am very skeptical about adding to any positions at the moment. Crude oil is obviously fairly cheap in terms of margins, you can see, so that can be added. But in terms of opportunities, I'd love to add maybe to Visa, which I think is a fantastic company. Again, Visa's struggling with consumer spending at the moment and the inflation. Excuse me. So but I love S&P Global. I think if S&P Global was to fall further back under 420, I would buy more. Potentially even Adobe worth might be another buy. I am tracking other stocks, as you well know. I'm not going to go too much into detail. Microsoft's still under 400 at the moment. Bargain there, I think. I will do a small analysis, I think, this week. Or small. I don't even know why I said small, but an analysis on Visa, one of my stocks, just to get an idea of for you guys to see why it might be worth a look at it. Like I said, please do make your own due diligence on buying stocks. Don't obviously just copy me. But to be fair, at the moment, copying me might get you in the red at the moment anyway. So maybe not a good idea. But, you know, like everything you buy in when you first buy a stock, it's always in the red to start off with. And it obviously fluctuates. But to be fair, the markets have been very much against us so far, retail investors. But anyway, so that's where we're at the moment. I am looking at crude oil actually dropping quite dramatically. One more thing before I go on this morning diary. Gold is pretty flat at 5,000. It has taken a step back because of inflation and the Fed's not unknown what the Fed's are going to do coming up next. Crude oil is now 1% down and coming to 103, which I'm pretty pleased, but we're not out of the woods yet. Anything could happen in the Middle East between now and then, could pop that price up. And as we said, NASDAQ up nearly 1.5% today. We like that. And US 30 in form. I think that, again, is down to the fact that maybe potentially with it might clear the port of the Strait of Hormuz eventually through either NATO or some of its allies, the US allies. It would be interesting to see if the UK does the same. Who knows? So my thoughts of the day really is, like I said, I think the crude oil situation is very unstable. Obviously, still, I think it could go either way still. My thoughts are that eventually this will be sorted and there will be some kind of peace talks. I think, potentially, the strait will be cleared eventually. And I don't know how long potentially the Iranians can keep this going with the current attacks from both countries, Israel and the US. again, it could go on for another couple of weeks, which is the longer it goes on, the worse it may well get for the rest of us who are obviously trading. But we know we want peace around the world as well at the same time. So let's hope that can be sorted in both, from that point of view. So that's it for me. I think that's pretty much cleared the backlog of the weekend and Monday morning. Sorry if I waffled a bit too long. I don't want to do that too much, but there was quite a bit to catch up on. So please subscribe and like, and I will see you for the evening diary, straight up diary in terms of what's going on this week. I think we're going to be opening quite positively. But whether that will last and run out of steam, which we've seen quite a few times last week when it did open, I think that is to be questioned. So do keep an eye on the news, keep an eye on what's going on, trade carefully, don't overtrade. I think I'll be very careful at the moment with the volatility of the market, but that's just my opinion. It's Trader 72, over and out. See you this evening, guys. Take care.